You are on the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView, and in today's video, we will be breaking down a pair both from a technical and an order flow perspective to understand where are the best probabilities for a trading opportunity on the pair to obviously be capitalizing on it. So the video will be both very educational and practical, so without further ado, let's get straight in it. Okay, so it's definitely time to make an update on the situation that we currently have on GBP USD, as the market followed exactly what we wanted to see from our previous analysis on the pair. So it's time to make an update and understand exactly where is the next opportunity for this pair. Now, as usual, I will keep the analysis as educational as possible. So first, I will be speaking about the technical aspect of this market. We will then go and see what we have from an order flow perspective on the GBP, specifically GBP USD, because all currencies on the spot are traded against the USD. So if you check the commitment of traders for the GBP, what you're actually checking is already GBP USD, as you are reading what institutions, so hedge funds, have been doing on GBP against the USD. And obviously, if you have this kind of information and you know how to read them, then you do have an advantage over your competition in the market. And by the end of the video, you will know what other opportunity we can currently be looking for on this pair. So without further ado, let's get straight into it. Now, starting here on the monthly time frame, what we have is a market which has just provided a nice W formation. Now, in general, after a W formation, what you want to see is the market create a move to the downside to go and complete the pattern at the neckline, which is the previous resistance, which is now turned support. And after the market tests and completes the pattern at this previous resistance, now turned support, what you expect is for the market to create a continuation to the upside, rejecting this area. And that is in fact exactly what the market has currently just done on the monthly time frame. In fact, we consider the market completed this W formation at the neckline and then started the continuation to the upside, exactly as we usually want to see in this kind of situations. Another thing that we can see is that you have an impulse, right? And after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And what we can see is that the market retraced exactly to the 50% of the Fibonacci taken on this impulse, from which you definitely do expect the market to create the continuation to the upside, since the 50% was in confluence with the neckline, aka the previous resistance, now turned support, creating a confluence of support at this area from which we definitely expected the market to create this move to the upside. Going down on the weekly, what do we see? Now, on the weekly time frame, price action is quite clean. We have a market which created a nice impulse to the downside, followed by a correction before the continuation lower. Now, when the market creates a high in the market is a resistance area. And after the market broke this resistance to the upside with this impulse, previous resistance in the market, once it is broken, is turned support. So the market broke this previous resistance, which at that point is turned support, and the market tested it here and rejected it to the upside quite aggressively, which is exactly what you expect in this kind of situations. You expect the market to reject previous resistance, which is now turned support, creating this move to the upside, which is exactly what GBP USD has just done. Now, one very important thing that we can notice, all this move to the downside started exactly from this wick here. So this wick is a very strong supply area for this market. It's a very strong supply zone for GBP USD. And in fact, from this area, we definitely did expect the market to start this move to the downside, which is exactly what the market is currently doing, rejecting the very strong supply that we had here with this candle that is currently red. We still don't have the close of this candle, but this candle should close in 4 days and 8 hours, and we should definitely see it close in red for a nice rejection from this supply. Going down on the daily, what do we see? Now, on the daily time frame, first of all, we had spoken about GBP USD quite a few times even lately. We spoke about GBP USD after the market had provided this W formation. I made a full breakdown explaining all the reasons for which from here we first wanted to see a retracement exactly to this area before starting this continuation to the upside, and that is exactly what the market did. Then after this retracement, I made a full breakdown explaining all the reasons for which from here I wanted to see this move to the upside, and again that is exactly what GBP USD did, and obviously we capitalized on the move with students. Then we had this creation of this overextended W formation, and from here we first wanted to see a retracement, and that is exactly what the market did, completing the pattern at the neckline. And from here, with the very last analysis, what did we say? We said we want to see the market from here create a higher high to go and grab all the liquidity that is at this zone before starting a move to the downside. And the market did exactly what we wanted to see. So completed this impulse correction and impulse pattern to the upside as we wanted to see, grabbed all the liquidity, and at that point the big institutions can add even more shorts and started a nice move to the downside, which is exactly what we wanted to see from our previous analysis. You can go and check it out. Actually, you will find all this previous analysis linked in description. You can go and check out all this previous analysis is all linked in description. So this will obviously serve as more education, more free education, and for the reference. So you can go and check out, everything is linked below. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover or analyze in the next videos. Now, at the moment, what do we have and how we can be looking for the next opportunity? Now, first of all, why do I say that many stop losses were here and hedge funds wanted to go and hunt these stop losses to create this move to the downside? Because we know that hedge funds were adding shorts on the pound. In fact, if we go and see what was going on from a COT perspective, we can see that the net positioning for the pound went from having 12.7k net positions all the way down to having minus 17k net positions. So we went from having more longs than shorts on GBP USD from an institutional perspective with 46.5k longs and 33.8k shorts, all the way down to having way more shorts than longs with 47.9k shorts and 30.8k longs. So completely the opposite situation. Now we have way more shorts than longs. And in fact, we did expect the market to create one last move to the upside to grab the liquidity that is at this high, and that basically will give the possibility to institutions to add even more shorts for a nice move to the downside, which is exactly what the market is currently doing. Because always remember that the big players in the market, they have too much money to manage. So they have to generate the liquidity to actually add more orders. And there is no better thing to go and hunt stop losses or create fake breakouts to actually generate liquidity. Because once the market broke above this high, many people started longing GBP USD at this high after the higher high. And all those long orders can be used by institutions to actually sell, which is exactly what they did. And in fact, the market started to move to the downside as we already wanted to see from our previous analysis on the pair. Now that we know that hedge funds are interested in these shorts, how we can be joining the move again? Now, there is one very important thing to notice. Currently, we are testing daily support. In fact, at this area, we have previous daily resistance here, again resistance here, turn support here after the market broke it to the upside, because previous resistance in the market is turn support. So turn support here and again support here. And until the market will remain above this support, we cannot be looking for a short exactly here, because we would be shorting at a daily support area. So either you are already in the short from here together with the banks, or anyway, from here is not a good idea to short, because you would be shorting at a daily support zone, which is never a good idea. So there are two options. Either you wait for the break of the support with a daily close below the area, or the market could give us a retracement. Now, if the market will give us a retracement from here, then what we will have? If the market will give us the retracement, we have the possibility to create this head and shoulders, which is definitely good for a shorting opportunity, because we would have bearish structure at this area. So if the market will not manage to break below the support and create a move to the upside to go and retrace at this structure, what we will be doing with students, and doesn't matter if you're already in the short or if you're looking to compound, if the market will give a retracement, it will be definitely a good opportunity to be looking for a potential short. So during this retracement, what we will be doing inside of this area with students is monitoring price action from a 4-hour perspective. Why 4 hours? Because monthly, weekly, and daily are the best time frames for the direction of the market. But when it comes to confirmations and entries, the best time frame is the 4 hours. So during this move to the upside, what we will be doing with students is monitoring price action from a 4-hour perspective, waiting for the market to shift from a 4-hour bullish market to a 4-hour bearish market. And as soon as the market will shift from a 4-hour bullish to a 4-hour bearish market, we will be adding GBP USD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and for the market to give us a nice shift away from the strong supply that we have already identified from a weekly perspective. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, take profits, as well as having me answering all your questions every single day. So I really suggest that you go and check it out, and I will see you in. The link is in the description.